Professor Suarez here. Sorry, forced to habit. Mr. Suarez here, bringing you lesson on the financial environment. So let's go ahead and get started. It's very different for you guys, I'm sure, not seeing me here. Like I said before, my ghost is going to be here, giving you guys lessons and instilling my knowledge into your young minds. Sort of like a sculptor messing with clay to build his masterpiece. Maybe not, but we'll try to have fun with this, right? Don't hear the baby yet. That's because the baby's gonna be born tomorrow. So I'm taking advantage, recording some of these videos. Maybe in the future ones you'll hear little Emmanuel crying, or maybe even Jaden running around asking me to play with him. But let's go ahead and not waste any more time. Let's go ahead and get started. So we went over recently the business life cycle. Pretty straightforward, right? You know, you have 4 stages in the business: emerging, growing, maturing, declining. And you as a financial advisor or financial investor or loaner, banker, what have you, right? You have to figure out when are the best times to invest, when are the best times to sell, when are the best times to not lend any money based on this business life cycle. And as you've already learned, it's speculative, right? Nobody has an exact pin or an exact formula to figure out, what businesses are. But that's okay, because based on these differences in opinion, you could go ahead and invest and make money. Now, what if I told you there was a much better way to really pinpoint what are the best companies? And it should be obvious, right? Because when you invest in stock, right, what are you really investing in? You're investing in a company and the belief that these are the best companies, they're going to be successful, right? So why not look for successful companies? Why not look at their cash flow? And this is where the light bulb should be going off, right? But some of you guys are saying, Mr. Suarez, we haven't even looked at cash flow. We haven't even looked at the accounting or the financial statements of companies. We've just been investing based on stock price. And I get that, right? But what I'm saying is, now that you have a good idea of where these good deals might lie, the next step is to dive a little deeper, look at their information, and look for specific things. Now, what are these things, right? So there's a term called the cash flow cycle. Another cycle. Let me break it down. This is just a complicated way of saying, let's look at how they do business as usual and look at their bottom line. Are they making profit? How much profit are they making? What are their costs? What's their revenue? And is the difference enough to warrant or even say that these are some of the best companies to invest in? Now, the business cash flow is called a cycle in this sense because it happens every day. Take, for example, McDonald's. Somehow McDonald's manages to sell the same burgers every day, and yet they never go out of business. People never get sick of them, and they always have customers. This is because they are masters at the cash flow cycle. Every day they have their regular costs: buns, lettuce, the fryers, burgers, workers, and they pay for these things, of course. But they also sell the burgers in such a way that it's more than what it's costing them to run the business. And that is what makes a successful business. Because you have these 3 things that are always balancing each other out. First is revenue, which is defined as the total sales from goods and services before expenses and taxes. Complicated way of saying all the money you get from your business. So Mickey D's, all the burgers that they sell, the cash at the end of the day, that's revenue, right? Then you have your cost, is defined as any money or any expense required to gain access or produce something. Gain access to or produce something, excuse me. Which, I mean, it's pretty self-explanatory. If you have to pay money or time to get one thing, it's going to cost you whatever it is you put up or invested to get that. And then profit is the money earned after expenses subtracted from revenue or expenses subtracted from income. That's the spread. That's what we're looking for. So that we look for it in every day. If you are invested in a class, you want to know that the time you spent studying, showing up, is going to have a return on that investment that's going to give you good grades, scholarships. Maybe you might be able to get with a cute girl in the class too because you guys are studying together. All these things play into what you give your focus and energy to. And as a business, that's just an extension of the individuals who are a part of it. Now, the hope is that as a future investor, for example, you're not going to have to go to every business and figure out, hey, are you guys running your McDonald's to the standard that all the other McDonald's are running it, or to the point where the profit margins are substantial? No, you don't have to do that. As an investor, all you have to do is look at their financial statements and make a judgment call on that, because you'll know, let me look at their expenses, let me look at their income, let me see the difference so I could figure out what the profit is, and let me compare it to the other investments. That's known as benchmarking. When you compare investments to the standard of the industry, you are able to make a better decision as to whether that firm that you're investing in is performing better or worse than the rest of the companies out there. Important thing to know, because this is most likely going to be on the questions that I have you guys answering. The person responsible for the documentation, right? He's known as the Chief Financial Officer. Now, the Chief Financial Officer, or the CFO, is the corporate officer responsible for financial risks, record keeping, and financial reporting in a firm. Let me say that again. The CFO is responsible for financial risk, record keeping, and financial reporting in a firm. And the reason that that's important is because as an investor, you want to know that they're hiring the best CFO that's going to give you the most accurate information, because this is what allows you to invest. This is what gives you insight to all the different factories and offices that are making this business run. The reason that the CFO can do their job is because there are accountants in these firms who are professionals who measure and assess financial information for the individual business and the firm as a whole. And these are the guys who are in the mud, in the trenches, getting all the information on cost, on revenue, so we can calculate profit. So to recap, keywords: cash flow cycle, which is the cycle of purchasing inventory and then converting that inventory into sales. And like I said before, this is done every day by successful businesses. The goal for these successful businesses is to generate profit, which is the difference between costs and revenue. Businesses who have higher profit margins or higher spreads or higher differences between costs and revenue, I'm saying the same thing here, these are the businesses that you want to invest in. Now, to get more specific, revenue is defined as the sales of inventory or the process of converting product into money, right? Then The cost piece is whatever value or investment you have to put in for something or to get access to something. And when you're developing a business or your business idea takes off, it's a matter of you balancing these two things, paying something or investing something to create value and then transferring that value to somebody else who then either reciprocates that value or gives you more of that value in return because they're not able to do what you do. Another piece, the CFO, Chief Financial Officer, is responsible for financial risk, record keeping, and financial reporting in a firm, and he wouldn't be able to do that without the accountant, who is a professional who measures and assesses financial information for an individual firm. And with that covers the first digital lesson from Mr. Suarez's ghost, Mr. Suarez. I hope this was helpful. I hope it was fun. And if you are having trouble following along, they do offer a transcript, which is an option through YouTube. Not only that, you could also search through the transcript to pull out any piece or any definition that might help you to answer the follow-up questions for this. That being said, I hope you guys are staying out of trouble, first of all, and also keeping up with your work. Miss you guys already. You guys be safe and take care, and I'll see you guys soon.